how to handle various assessment and audit by GST department. Initially, when I start, I want to give theme presentation. My objective is not to give technical presentation, a detailed presentation. For that technical session going to follow, but theme presentation to ignite your mind, what we want to discuss today. And what are the areas where we are facing problem today and we are looking for the solution. When I talk about various assessment under GST, I can tell you there are the 6 components starting from section 59 to section 64 under chapter 12, read with rule 98 to 100, relevant one for various kind of assessment under GST. When we talk about GST audit by department or special audit, 2 important sections, section 65 and section 66 going to play important role. Read with the rule 101 and 102. So what are the things we are going to discuss today? I'm going to just throw some light. Technically, I will leave to the learned speakers to deliberate. They can take up the legal jurisprudence, they can discuss the issues, they can discuss the solution. But my objective is to ignite your mind, to invite your attention, where the problems are and where we are heading for. If I start with the section 59, which is self-assessment tax, it is rightly so GST is being considered as a self-assessment tax. It is to be self-assessed by the registered person and to be paid by registered person. And to what extent it is self-assessment, it is a matter of debate today. See, what is happening under self-assessment, we initially thought there would be automated GST return system. And this GST return system was envisaged on different sections, section 37 for GSTR1, section 38, GSTR2, section 39, which was GSTR3 initially. Later on, it was GSTR3B, and we have not seen light of the day for the return GSTR2 and 3. When we talk about ITC matching and mismatching, section 41 and 42, it was initially envisaged. But where we are today, how we are heading for. When I talk about GST automated return system, it is never implemented from July 1, 2017. Government has not introduced GSTR 2 and 3 since beginning July 1, 2017. So ultimate objective of self-assessment tax, duly determined, duly calculated and deposited through machinery provision is somewhat missing today. And let me highlight one important thing, which may be a case study for you, for all of you to put your mind and let me know the answer of it. Self-assessment tax means I need to determine my outward liability. I need to calculate my input tax credit available on my purchase, and I'm supposed to pay net tax liability. As on date, what I'm filing GSTR1, which is my outward supply, and filing GSTR3B, which is consolidated monthly return, wherein we are putting the figures of outward supply, input tax credit, and making payment of net tax liability. I do not know, though it is being said that GST is going to be a good and simple tax, but I'm sorry to say, I'm not finding this feature of GST good and simple tax. Recently in this Union Budget 2021, recent budget, Union Budget, Finance Bill 2021, clause number 105 was introduced. And what is this clause? Let me take an example and draw your attention. Let's say I'm filing my GSTR1, and when I'm filing my GSTR1, I have made mistake. As against my 50,000 rupees liability, I have shown as a 5 lakh rupees. Just 1 0 extra got added. To error is human. I made mistake. I shown as a 5 lakh as against actual liability of 50,000. Now the first question, I have already submitted my GSTR1. Can I revise the same? There is no revision option in GST law. We can't revise GST return. So what happened? I can only amend in subsequent month. But when I'm paying the taxes through GSTR 3B, quite obvious, I'm going to pay only 50,000, which is my liability, even though I have wrongly furnished figure as a 5 lakh. I know that I made the mistake. Now there are difference between GSTR1 and GSTR 3B. I would like to draw attention of each one of you. Tell me whether department can consider this difference of 4,50,000 as a self-assessment tax. First question. And second question, I'm quite sure that you will say it is not self-assessment tax. Tax will always be 50,000 rupees. So my first question, which I have thrown to all of you, whether this difference of 4,50,000 going to be self-assessment tax. And second question, whether department can recover this money without issuance of so-called notice. Recovery without issuance of so-called notice. Is it possible, doable? So two questions I posted in the name of self-assessment tax. They are saying that GST is a self-assessment tax, but corresponding provisions are not being articulated, which is supposed to be. And this clause 105, which I'm referring from Finance Bill 2021, by the explanation inserted under section 75, subsection 12 of CGST Act, you will surprise to know today, they are saying it is deemed as a self-assessment tax. Just think of a position. They're saying it is going to be self-assessment tax and it can be recovered without issuance of so-called notice. Is it possible, doable? It is not doable at all. But why such kind of provision are being introduced? Those are contrary with the basic objective of GST being good and simple tax. So first point, there's a law. And second point, law is not duly supported with the intention as given to the trade, industry, and commerce. So this is self-assessment tax. Going to the second point, section 60, provisional assessment. When possible, who can go for it? What are the provision? What is the legal jurisprudence? My friend, Mr. Abhishek Rastogi is there, and he is going to deliberate on this technical topic of provisional assessment. Just to draw your attention, when provisional assessment, when as a taxpayer, you can go for provisional assessment. As the name suggests, provisional. It is not final. And when you can go for provisional assessment, when you are not in a position to determine correct value for the chargeability of GST or correct rate, and rate can be 5%, 12%, 18%, 28%. So if you are having doubt and you want to determine correct classification and rate, and because of doubt, you are not able to determine, then for two region, valuation and rate, you can go for provisional assessment. You can make an application. When I talk about valuation, the important point where you would be having doubt, valuation under GST is a transaction value on which GST leviable when supplier and recipient are not related and price is the sole consideration. But there are certain inclusion and exclusion within the value for the chargeability of GST. What are the inclusion? All other taxes and duties other than GST. Some value which supplier is liable but incurred by the recipient, or some of the incidental expenses incurred by supplier for the provision of supply, interest, late fees, delayed charges, or subsidy when it is being given on the price to the supplier, other than exception when central government and state government is giving, inclusion in the value. And when your consideration is monetary and non-monetary, To the extent of non-monetary, which is in kind, we have to go back to CGST valuation rule. So when you are not in a position to correctly determine value and rate, you can move for an application for provisional assessment. And this application to be decided within 90 days. So what is the benefit and advantage to the taxpayer? You will pay GST on the value as provisionally assessed by way of provisional assessment order. Within 90 days, they are supposed to give you the permission. And final assessment order to be passed within 6 months, which can further be extended by 6 months by joint commissioner or additional commissioner. And it can further be extended by 4 years by the commissioner. But what is the critical point which I would like to draw in front of you? So as per provisional assessment order, you will pay GST on the value or rate as provisionally allowed. So there would be 2 possible situations, that you are paying the tax and you're supposed to pay the tax. So final assessment order which is being passed is the basis on which you have to pay the tax. So situation 1, you may have paid the tax, but the final assessment order talking about that GST is on higher value and it is coming out higher tax payable. So differential tax need to be paid. Am I right? So first question which I'm going to ask to Abhishek also, and I will request him also that he can deliberate in his deliberation. When I'm paying differential tax on account of provisional assessment order versus final assessment order, I need to pay interest. Interest to be paid from the due date of that relevant tax period. And rate of interest would be 18% per annum, 18% per annum. What is the reverse case? You may have paid excess tax as against the tax payable. So you are entitled to get the refund. My first and foremost, and this is the disparity in the GST law. When I'm paying differential tax, I'm paying 18% per annum interest, but when I'm getting refund, my interest rate is 6% per annum. Is it not discrimination? It is sure sort discrimination. And second, this interest is to be paid as per section 54 subsection 8, meaning thereby it is to be paid only when you are filing application for the refund, and beyond 60 days, then only interest is permissible under section 56, and rate of interest is 6%, going contrary to the rate of interest when delayed payment of tax, differential payment of tax. Provisional assessment, legal jurisprudence. I'm leaving to Mr. Abhishek Rastogiji to deliberate during his presentation. Moving to the next topic, section 61, scrutiny of return. What is the scrutiny of return? We are filing GSTR 1, GSTR 3B. So proper officer can scrutinize the return of a taxable person, GSTR 1 versus GSTR 3B. So they are going to reconcile what we have declared in GSTR 1 and what we have declared in GSTR 3B, and whether we have paid the taxes or not. There may be a situation differential. It is not reconciling for number of region. Maybe you have made the mistake. You were supposed to amend the same, but you could not amend during the time period as specified. So normally you know that GST return can't be revised. It can be amended in subsequent tax period, but till September of next financial year, that is what the normal provision all about. If you could not amend, there would be difference. And while doing the scrutiny, department proper officer may come back and ask you why this difference is coming out. You have to be ready with that reconciliation, that if difference exists, on what account. If this difference is duly captured in GSTR 9 and 9C, at least you get some window to explain your position. It is very, very important. Second situation, which is most critical, where Mr. Tushar is going to discuss today. I'm taking credit in my GSTR 3B, and what we are looking into GSTR 2A or 2B. My first and foremost question, whether 2A or 2B is relevant as on date for availing input tax credit. I'm sure Mr. Tushar is going to deliberate today, and he will show you that 2A and 2B got introduced by way of rule. And there was no provision, no backing of the provision from the Act. He's going to deliberate this topic today. And just to highlight and ignite your mind, just start thinking I'm your supplier in Delhi and you are in Rajasthan, my recipient, my buyer. I'm filing my GSTR1, but not furnishing correct GST number of yours. I'm supplying to you, but I made mistake and wrongly furnished GST number of some other party. It will not be coming in your 2A, but you have satisfied all four conditions of section 16(2), section 16 subsection 2 for availing input tax credit. As a buyer, you should have tax invoice, you should have received goods or services, your supplier must have paid taxes, and being recipient, you are filing regular GST return. So I'm only creating pointers that 2A, 2B is relevant. Take second case, it is a B2B supply. Registered supplier to registered recipient. If I captured as a B2C, is it going to be reflected in a 2A or 2B? No, but you have satisfied all four conditions. Third situation, it's an interstate supply from Delhi to Rajasthan, IGST leviable. I have raised correct invoice, paid correct taxes, but wrongly furnished as an intrastate in my GSTR1 as C plus Delhi SGST. It will come with error in your GSTR2A. Credit is not available. I'm sorry to say, I'm not agreeing with this position. For me, 2A and 2B is not relevant. And I'm sure about Mr. Tushar going to deliberate the legal jurisprudence on this particular topic as well. But while scrutinizing the GST return, proper officer may intimate you discrepancy. What option you have? Either you satisfy them within 30 days. If you don't satisfy them within 30 days, then what he is going to do? He is going to take the further proceedings of GST audit under section 65, special audit under section 66, inspection, search and seizure under section 67, so-cause notice under section 73, non-fraud cases, 74, so-cause notice for the fraud cases. These are the options. So I'm leaving this topic for your thought process to be ready for the technical deliberation. Then moving to section 62, assessment of non-filer of return. Those taxable person. So who is taxable person, first of all, in the GST law? Taxable person means who is registered and who is liable to register under section 22 or 24 of CGST Act. They're supposed to file return. If they have not filed a return, then the implication will come under section 62, which is base judgment assessment. So what is the non-filing of return referred in section 62? If you have not filed your GSTR 3B under section 39, or you have not filed your final return under section 45, then department going to issue notice under section 46, which is GSTR 3A, and you have to reply within 15 days. If you don't reply, they will pass best judgment order on the basis of information they have gathered or available with them to the best of their knowledge. And then the option before you, either you pay within 30 days once this best judgment assessment order is being passed. If you pay within 30 days, then it is being deemed as a withdrawn, but interest, late fees, penalty is leviable. But if you don't pay, section 62 start with a non-obstante clause, overriding section 73 and 74. Even issuance of so-called notice is not necessary. And what is the implication coming out? That they can move for recovery proceedings under section 78 and 79. And even they can go for provisional attachment under section 83 on movable and immovable property. Because it is overriding section 73 and 74, we have to be very, very careful. And base judgment assessment order can be passed within 5 years from the due date of filing annual return. Wider time period in their hand. We have to be careful. And they have issued one circular number 129, dated 24 December 2019, which is standard of practice, SOP for the non-filer of GST return. In my mind, I'm leaving the topic to the speaker to deliberate. Overriding section 73 and 74, recovery proceedings where it is being stated that recovery can be initiated only after 3 months from the date of service of the order, and provisional attachment, these are going contrary. Going forward, assessment of unregistered person. Unregistered person. Unregistered person means you are a person liable to take registration, but you have not taken registration. Or you have taken registration, but your GST number got cancelled and you're liable to pay tax in terms of section 29 subsection 2 of CGST Act. Under section 29 subsection 2 of CGST Act, when suo motu cancellation of registration is there are 5 specific situations. If as a taxable person, taxpayer, you have contravened any provision of GST Act or rules made thereunder. Look at the wider provision, wider power given in the hands of tax officer. Any contravention of any provision of GST law or rules made thereunder. Second, if you're a composition dealer and you have not filed continuously for 3-quarter return. If you're a regular taxable person, you have continuously not filed for your 6-month GST return. Or you have taken voluntary registration but not started your business operation within 6 months. Or you have taken registration with a false information. These are the example under section 29 subsection 2 for the cancellation of GST number. Here they can do the assessment of such unregistered person. You are being given 15 days time period to revert back. Such assessment order are subject to personal hearing. They must grant you an opportunity for the personal hearing. And last is the summary assessment. And summary assessment, as we normally understand, it is being done when departmental officer is of the view that some taxable person who is supposed to pay the tax and they want to protect the government revenue, they can do summary assessment, pass such order, and that is the provision given under section 64 of CGST Act. So I've narrated 6 broad parameters for which we are going to discuss today: self-assessment, provisional assessment, scrutiny assessment, assessment of non-filer, assessment of unregistered person, and summary assessment. This is the one part of the story. But second part of the story, which is important one, GST audit by the department or special audit by a chartered accountant or cost accountant. Let me tell you a little background of the provision, and then I will raise certain concern for the trade, industry, and commerce. As per section 65, commissioner or any other officer authorized can initiate audit by the department, by GST department. First point. When it is being initiated, importantly, 15 days minimum notice need to be given to the taxable person. This audit should be completed. The period defined is 3 months, which can further be extended on reasonable ground by commissioner for a 6-month time period. And once audit is complete, they are supposed to give us the audit memo showing where the deficiencies are. So if you pay the liability as per the deficiency as raised in the audit memo, matter is closed there and there itself. But the problem, in case you're not agreeing, they may initiate issuance of so-called notice either under section 73, which is non-fraud cases, And section 73 talk about when there is non-payment of tax, short payment of tax, ITC wrongly availed or utilized. So even wrong availment of credit as per section 73 is subject to issuance of so-called notice along with interest if you look at the section 73 provision. But in my humble opinion, reversal of wrongful availed credit but not utilized, no interest should be leviable. But those are the points we can deliberate, discuss at length. So ITC wrongly availed or utilized or erroneous refund, and time period is being prescribed for issuance of so-called notice and order. Section 74 for the fraud cases. But my foremost question which I'm asking and looking for the answer, when GST audit starts, they are sending a letter to us for initiation of GST audit. And they want us to deliver all the documents, my GSTR 1, my GSTR 2A, my GSTR 3B, 9C. Why should I deliver these documents? These are available on that portal, GSTN portal, a click away. Why department want submission of these documents, which is electronically filed? I do not understand these aspects. Second thing, what I'm finding in a trade, those who have filed their GSTR 9 and 9C, now they are getting notices for GST audit. But those who have not filed GSTR 9 and 9C, I'm still finding that they are not getting any notices. So I do not understand what is their preparation and what they are thinking, in what context they are initiating GST audit. Coming to section 66, which is special audit. An assistant commissioner can go for this special audit during scrutiny, investigation, and inquiry. When he is having any doubt pertaining to valuation or input tax credit avail to region. If he's having any doubt that taxable person has not correctly determined the value or correctly taken the input tax credit, this special audit may be allowed to the chartered accountant and cost accountant nominated by a commissioner. And he's supposed to submit the report within 3 months, which can further be extended on 3 months time period. But one important provision here, which you must know, and that important provision is saying this special audit can be undertaken irrespective of fact your books are being audited under the provision of GST law. So even though department has done audit, section 66 special audit can be undertaken as per the law. Even you got audited done under any other law for the time being enforced, that is overridden. So overriding power given under section 66, and remuneration to chartered accountant and cost accountant to be paid by the department only. This is the special audit feature. So I'm not discussing much of the point because some of the points are going to be very important. Where this audit can be done, whether at registered premises of taxable person or in the office of GST department. What is the meaning of initiation of audit so as to be completed within the time period of 3 months? If they have completed, if they're not issuing audit memo within 30 days, what is the repercussion? What kind of legal recourse we have in our hand that they must submit the audit memo to us? Fourth, even audit is being done with the investigation, search and seizure can also be initiated. And we have seen the multiple proceedings by central department and state department. Lot of things we can deliberate and discuss under this topic of GST audit by department or special audit. Last, to summarize, GSTR 9 and 9C. 9C is a reconciliation statement to be audited by chartered accountant or cost accountant, done away with. For financial year 2021, what is the clarity given to all of us together? That This certification by chartered accountant and cost accountant is going away. For 2021, GSTR 9 is exempted for a taxable person whose aggregate turnover is up to 2 crore. He need not require to file GSTR 9 and 9A for composition dealer. If it is 2 crore to 5 crore, GSTR 9 is compulsory, which is annual return. GSTR 9C, which was reconciliation statement, supposed to be audited by chartered accountant or cost accountant, is being done away with. Now it is going to be self-certified for financial year 2021 onwards. And it is compulsory only when aggregate turnover is more than 5 crore. So this is what the provision which is being given for the GSTR 9 and 9C. And let me conclude my theme presentation on today's topic. I have shown certain provision, I have deliberated on certain provision, I given certain food for thought where divergent perspective, the problem exists, we all are looking for the solution, and leaving the topic for the learned speakers to deliberate at length. These assessment and audit under the GST law. So I'm thanking each one of you for your patient listening. So we can start with a technical deliberation, handing over to Dr. Sharma. But before that, let me thank each one of you for giving your time joining today, and be tuned, because all the 4 presentation which is going to happen after this presentation is going to be value addition. You will get a lot of insight. Learned speakers has presented their topic. They are going to present their topic with so many multifold with the value addition, and you will get more clarity and more answers and solution of the problem for the trade, industry, and commerce. Thank you very much for your patient listening. Thank you.